Welcome to Movement Charts on another weekly analysis video. Starting with SPY. SPY is still consolidating between these two ranges, 676 and 697. Looking at the daily candles, yesterday SPY printed a hanging man candle and today it gapped down but printed a bullish candle. Even though it is a bullish candle, it's still bearish because it closed below the yesterday's closing price. But we are still trading within this range and we are still inside this pattern. We also can see this symmetrical triangle pattern. So price may break out to collect the liquidity above this resistance level before start correcting, or break down below this ascending wedge pattern to collect the liquidity below the support level 676 and 670 level before moving back to the upside. Looking at the lower time frame for the intraday price action analysis, today SPY opened at this demand, then it was just trading between that opening and this gap. This failed gap. So it printed two bullish engulfing candles during the intraday 15 minutes time frame, one at the morning session and another one near to the closure of the session today. Then it broke out this intraday resistance level, came back to retest the gap it created in the 15 minutes time frame and again printed a bullish candle, breaking this lower time frame downtrend. Basically, it was a choppy day between these two support and resistance levels. The usual Friday price action we saw in the daily time frame, hourly time frame, just took the support of this symmetrical triangle pattern and just closed between the gap of yesterday's close and today's opening. And the hourly time frame price haven't closed below this higher low of this uptrend. So any candle closer below this higher low may result in breaking down this ascending triangle or ascending wedge pattern on the daily time frame to test this support levels at 676 and 670. Looking at the weekly time frame, it was just a consolidation candle respecting the opening price of last week's bullish engulfing candle and closed above the 50% of last week's engulfing candle. We are still at the support of 20 EMA on weekly time frame, but we have been consolidating between these two ranges for almost 7 to 8 weeks. Looking at the monthly time frame, another small consolidation candle taking support at 5 EMA like last month. Little far away from 20 EMA on monthly time frame. Looking at the RSI on monthly time frame, we are still melting about 70% and we still have some more room to breathe. So any dip on the weekly or daily time frames will be bought. Moving on to Microsoft. Microsoft is still trading at this support level after filling this gap. Let me delete this channel. You can see that it is taking support of this bottom channel line. Let me delete this. Okay, so looking at this level, it printed an inside bar on February 6, which pushed the price to the upside but got rejected at this gap. It wicked into that gap and printed a bearish engulfing candle on the next 2 days, and then it pushed the price down to another lower low. On February 24th, it printed a bullish piercing candle which pushed the price up into this fair value gap, and then today it gapped down and printed an inverting hammer. So it had a fake breakout yesterday and pulled back inside this trendline resistance. This candle on Wednesday was a bullish Morbosu candle. If Microsoft takes support of this Morbosu candle's opening price in the coming sessions and break above this resistance or lower high 423, then the trend will get changed for Microsoft with this inverted and shoulder pattern. This bearish fair value gap is mitigated by this candle. Either this move has to form another lower low or take support of this bullish Morbosu candle or this bullish piercing candle to close above this fair value gap and break this lower high. So to change the trend of Microsoft, it has to close above this lower high and daily time frame. If we see any rejections at this resistance level, then we will come and test this gap as well as the swing low. Looking at the weekly time frame. We can see that price is still respecting this uptrend line support and closer to this 200 SMA and weekly time frame. RSI is below 30 level and we printed a doji candle this week, last week also at this support level. So any bullish engulfing candle on a weekly time frame may help Microsoft to go and retest these resistance levels for 40 level and 470 level. Looking at the monthly time frame, also Microsoft is at this demand zone, and fill this gap, and if we take Fibonacci retracement from this swing low, the price is at the 50% Fib retracement from the swing low to swing high. So if we take it from this swing low to this swing high, the price is at 78.6% Fibonacci retracement. So for Microsoft to change the trend, it has to close above 423 level, this lower high. Any rejection at this resistance are at the 20 EMA may lead to another lower low. Moving on to Apple. Apple also reversed this week and detected at this supply zone, and it printed a bearish engulfing candle in today's session. Apple is also trading on the symmetrical triangle pattern. The immediate support levels are 258 level, and then we have 244 resistance at 275, and this 280. So we need to see how it breaks out. Looking at the weekly time frame, so it printed a gravestone doji, rejecting at this resistance level. If we see another bearish engulfing candle breaking this symmetrical triangle pattern, then we may come and test this support levels 239 or even 226. But if we break above this symmetrical triangle or this cup and holder pattern, if we break above this symmetrical triangle or this cup and holder pattern, then we'll see another higher high. On January 20th week, it took support at this 38.2% Fib retracement from this swing low to swing high, and currently it is still trading about 23.6% Fib retracement. So if we close below this Fib level and this symmetrical triangle pattern, then we may come and test this 61.8% Fib level at 215. It is on a weekly time frame, so it will take its own time. breaking above this symmetrical triangle pattern. May push the price up to collect liquidity above this shooting star candle around 289, the high of this candle 289. Looking at the monthly time frame. Monthly time frame also just rejected at this resistance level. We'll have to watch the price action. Here's the current swing high of Apple is at the resistance of this trend line where it corrected last 2 times, and we have this RSI bearish divergence also. So the breakout of this symmetrical triangle pattern on the daily time frame will decide the direction. Looking at Ford, last week Ford had this morning star pattern which we discussed on our last week's analysis video, and then on Monday it printed a bearish candle collecting the liquidity below this low and testing this fair value gap on the daily time frame, but it took support at this fair value gap and printed a bullish engulfing candle on Tuesday, which pushed the price to 14.80 and closed below the resistance level which we discussed last week. Currently the price is at this fair value gap and at the 9 EMA support. We have 20 EMA here. We have support at 20 EMA also, and these support levels may help to test this high again. Looking at the weekly time frame, Ford is trading above 20 EMA and 200 SMA, and within this uptrend we have this bearish fair value gap area to be tested, and this swing high around 19 level also. So if Ford continues to get support at this trend line or the moving averages, it will go and test this resistance at 16 and 19, because it broke out of this larger time frame consolidation around more than 2 years, like from 2022 till 2025. So this consolidated on this range for around 3 years and broke out on October 2025. Since then it's respecting that breakout candle. So, unless Ford closes below 13.58 or below this trend line support, it is still an uptrend. Looking at Walmart, as we discussed on last week's analysis video, Walmart took support at this trend line as well as the 9 EMA on weekly. It moved up to test this 126 resistance level. Then it left a fair value gap. Then it retraced back to test that fair value gap, and today it printed another bullish candle, breaking out this lower time frame downtrend. So we have now support at 126. Looking at the weekly time frame, after taking support at this 9 EMA, this week it printed a bullish Harami candle. So Walmart may go and form another higher high or consolidate here for 20 EMA to catch up on a weekly time frame. Looking at the monthly time frame, okay, so now monthly time frame, we can see that price is at this trend line resistance. Even in the last two time also, it was not much of correction, it was just consolidation before another move. So we still have some more room on the daily time frame. At least we may go and test this swing high 133.34 level. So support at 126 area, 126, 127. Resistance at 133, 134. Kroger. Looking at Kroger. Kroger has the earnings on Thursday, March 5th, and it took support. It printed a bullish engulfing candle on Monday, February 23rd. After this correction, right at the 20 and 200 SMA on daily time frame, then it retraced back to test 200 SMA again, and today printed another bullish candle, taking support at this weekly fair value gap. This fair value gap, we have a long bearish candle, but it took support at 9 SMA, and we also can see it broke above this lower high, and currently it is in back to mitigate this fair value gap, and taking support at the 9 EMA. So if the earning goes well, Kroger may go and test this resistance 73.6 again. If it closes below 66.18, then we have support at 63.5. Looking at Tyson Foods, TSN. This is also in an uptrend after breaking this longer time downtrend. Price is now trading above 220 SMA on daily time frame. So it actually had this bullish engulfing pattern yesterday at this support level after collecting the liquidity below this low. And then it printed a bullish Morobos candle of 3% move today, confirming the uptrend. So I don't know whether it will pull back it will go and make another higher before pulling back. We have support at 64 and 63.15 if the trade traces back. Looking at the weekly time frame, it broke out of this resistance 63 on January last week. Then it pulled back to test this fair value gap and 509 SMA. So this week it printed a hammer candle taking support at 9 EMA and this fair value gap. We have a 20 EMA crossover 200 SMA. So looks like it is on the start of a uptrend, like we see here. When the 20 EMA crossed down 200 SMA, it moved down from this lower high 62.41.5 level. Now we have this 20 EMA crossover 200 SMA. This is on weekly time frame, and we have this higher low formation, so we may go and test this 85.6 level. Looking at PLTR, so it took support at this support level 128.5 for more than 3 weeks, and it formed a morning star pattern, a bearish candle and a doji, and then a bullish engulfing. Then we can also see this lower time frame descending triangle pattern breakout. So it may go and test this resistance at 148.5 or the 200 SMA around 160. Before that we have the 20 EMA to be taken out, and this fair value gap is already mitigated by this shooting star candle. So if you close above this shooting star candle, then definitely we'll go and test this 148 and even this resistance at 165. It left a fair value gap here, so any candle closer below this fair value gap level will invalidate this setup, because we are still trading below 20 EMA on a daily time frame. Looking at a weekly time frame, we have this pattern. So that puts the price down to the support level, this demand candle. We are seeing reaction from this support and demand zone. So we may go and test this neckline at 148 or this 9 EMA on weekly time frame. We are closer below the support 128.5 will take the price to the support level at 90 to 97 area because of this head and shoulder pattern. Moving on to KHC. KHC broke out of this falling wedge pattern and it's currently trading at this resistance level and 200 SMA resistance level, but it also retested the falling wedge pattern breakout and consolidating around this resistance level and 200 SMA. If we close above this lower high and the major resistance where we saw rejection at 2 times, 25.5, we change the trend for KHC. We can see a liquidity sweep below 20 EMA and daily time frame. We can also see a rejection from these resistance levels. So if KHC breaks above this major resistance or this lower high, or if we see a 20 EMA crossover 200 SMA, then KHC will put an end to its long-term downtrend. Looking at the weekly time frame, and the weekly time frame also broke out of this falling wedge pattern and retested its swap liquidity below this swing low, but we have not taken out this lower high yet. But looks interesting because of this liquidity candles and this falling wedge breakout. Looking at the monthly time frame, last month we had a hammer candle at this support level, and this month it printed a bullish candle but doesn't look like a strong bullish engulfing. We can still see a rejection at the 5 EMA and monthly time frame. So I would prefer it to close above this resistance 25.5, but we can see a increase in trading volumes at these levels. So a closing candle above this 25.50 level would be a end for this downtrend of KHC, or at least to test this 28.25 level. Thank you for watching.